Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
So let's start with the most known Greek out there, and that's delta. Delta is the amount a theoretical options price will change for a corresponding 1 point change in the price of the underlying. So I'm going to go through a quick example, and many of you probably have a good feel for this, but I want to make sure that everybody is on the same page, and that's what's important with all option pricers, all option pricing. We should all have a realistic expectation as to what happens when the underlying stock moves. So let's start off with the stock at 50. We have a strike of 50. We have a 3-month call option trade for $3. All right, so we got a $3 option, and for those of you that are out there, this would be referred to, or beginners, we'd refer this to an at-the-money option contract. Strike is equal to the stock. All right, 3-month call option trade for $3. Let's move the stock. Nothing else happened. We still got a 3-month call option. We bought that option today, paid $3, and the stock went from 50 to 51. How much will our call move? What would you think? Now, we don't necessarily need to pound the Q&A box, but just think about it. Put a number in your head. I'd like you to pause because this is an important step. Well, when the stock went from 50 to 51, there's a couple answers that we could give, but if we were going to guesstimate on a price, we'd say that that option would probably go from 3 to about 350. Another answer that I would have accepted if we were like, if I was a professor and I was grading a test, is that it would have moved the amount of delta. So when we started this, we were saying that the delta was around 50 cents. Then when the stock goes from 50 to 52, 51 to 52, right, the next point movement, on the next point movement, we go from 50 to 51, 51 to 52. This option contract, the next question for me is, I'm sorry, I got a little discombobulated. My next question is easier to answer. Do you think this option will go up more than 50 cents in the next point movement, or less than 50 cents? Or maybe it will stay the same. Maybe it will go exactly the same. What do you think? The stock started at 50. It went from 50 to 51. We saw that the option moved about 50 cents. In the next point movement, it went from 51 to 52. How much do you think that option contract will move now? And the answer is that it will move more. Yes, that's correct, Brian. It will move more. It will go up about $4, about 60 cents in the next point movement. Now remember, nothing else is changing here. We have nothing else moving. We're just saying we bought this option and boom, we're a really good stock picker, and the stock moved right away. So none of the other variables changed. And according to Delta, well, this option contract should have moved about 50 cents in the first point movement and 60 cents in the next point movement. Now, if that's a little confusing to you as to why that changed, I want to talk about a non-textbook definition of Delta. This is the way a lot of the traders on the floor think of Delta. Now, you don't see it in textbooks, mainly because I'm sad to say that it's not a correct definition. Delta is not some advanced probability formula, okay? So let's read the definition and I'll talk a little bit more about it. But the non-textbook definition of delta is the probability of the option being in the money, and we'll say, and I'll even add to this, being 1 cent in the money. Not saying being profitable. It says the delta is the probability of the option being in the money on expiration. So if we had a 55 strike call and the stock was at 50, it's the probability of at expiration that stock reaching 55.01. All right? So that's what we're kind of looking at. And this will give you a feel for delta. Now, it's not 100% accurate as far as a definition is concerned, but we're not about being 100% accurate as we're looking at retail trading. What I want you to do is to have a basic understanding and a feel for what delta will always be on any option contract that you're looking at. And this definition will help us with that. So if we go back and we look at our scenario, when the stock was at 50 and the strike is 50, there's still 3 months remaining to expiration. What would be the probability of this option finishing at least 1 cent in the money? Well, if the stock is equal to the strike, the probability is going to be about 50-50. No matter what time period or what time frame you're in, it's going to be fairly close to 50. If the stock goes up 1, it's in the money. It goes down 1, it's out of the money. At this point in time, the probability of it finishing in the money is about 50-50. And hence that was reflected in the delta. The delta on this first point movement was about 50 cents. Now, let's go to the next point movement. It goes from 350 to 410. If I look at that, that's about a 60-cent movement. Well, let's think about probability. The underlying right now is at 51. So I'm going to actually grab this little pencil here, and we're going to go across. Underlying right now is at 51. And if I look at that, and I say that the underlying is at 51, the option is at 350, now what's the probability of it being 1 cent in the money? Well, I don't know exactly, but it's a little higher than it just was, right? Now we're at 51, I'd say there's a little bit higher probability. And that's reflected. The next point movement here was 60 cents. All right? So yeah, we did see that probability change, and we also saw the movement change. All right. So we know as the underlying stock goes up and down, the delta is dynamic. It will move as the underlying moves. But now let's look at it and with respect to time. Let's see how it affects as far as time is concerned. All right. So if I look at the non-textbook definition, the delta is defined at, the delta is the probability option being in the money on expiration. I put this definition up here because this is what we're going to use going forward. The stock is 50, the strike is 50. We have 1 day remaining to expiration. What's the delta? What do you think the delta is on this situation? And you might want to type your answer. 1 day remaining. Stock, we just changed everything. All we did was change time. Time is 1 day remaining. What do you think the delta would be? And you can type in your answers in one of the boxes or so. The delta is none. The delta is 50. The delta is 0. 50, 50, 0. All right. So we have wide swings in delta. We've gone, oh, and down below I'm seeing 1. Okay, now I got all the answers that I wanted. Okay. So everybody that said the delta is 1 is a bull on the market. Everybody that says the delta is 0 is very bearish. And everybody that says the delta is 50 is exactly correct. As a matter of fact, you can't get a more 50 delta than this option contract. This delta won't be 0.51 or 0.52 with 1 day remaining on a normal stock. Right now, the probability of it finishing 1 cent in the money, if it ticks up, boom, it's in. It ticks down, it's out. And you only have 1 day's worth of trading. So the delta is as close to 50 as you could possibly get. See what I mean when I said that everybody that said 1 is a bull? Because you obviously think it's going to go up, and that's why it's going to be 1. And you obviously, people that said 0, they obviously thought it was going to go down, so it's going to, So in that situation, the delta is exactly 50. But I loved how wide our answers were, and I actually received every answer that I wanted. I wanted 1, 100 works too, same as 1 basically. 1, 50, and 0, and those are the 3 answers that we got. We got it quite often from a nice mix of people.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.